Good afternoon, everyone, and welcome to Stock Market Today by Investors Business Daily. It's Justin Nielsen here along with Ed Carson. While Allie is on a well-deserved vacation, it's Tuesday, September 6th, 2022, and we have just come back from a holiday weekend. So we're going to walk you through the day's action and see what we can figure out about this current market. So Ed, what stocks do you have on tap for us today?
Well, we want to take a look at Enphase Energy, Sunrun, and Waste Connections. Three stocks in a couple of groups that are doing very well.
Okay, but first, let's go ahead and take a look at the indexes. Down across the board here, the S&P 500 down 0.4%, Nasdaq Composite down 0.7%, and looks like the Dow Jones Industrial down about 0.5%, 0.6%, and the Russell 2000 taking it on the chin with almost a 1% drop. So I'm going to go ahead and pull up the Nasdaq Composite real quick, and Ed, why don't you give us your take on the current market action?
Well, the Nasdaq has now extended its losing streak to 7 days. You can see that, the 50-day line, it sort of went through it like butter yesterday on Friday. Major indexes hit resistance around that level. The S&P really did, and now we're losing sight of the 50-day line. We undercut intraday. The June 26th low did close above it for what it's worth, but obviously conditions have been getting worse and worse for the like basically since mid-August, and things just are not improving in that regard. And when that trend, most stocks are going to fall, and that's what they're doing right now.
Yeah, absolutely. And are there any particular levels? I mean, you mentioned, we've got the June 2nd highs here that we've been kind of talking about. We fell below that. We fell below the 50-day moving average line that you mentioned. Do you think we're in danger of hitting these lows from back in June?
It's certainly possible. I mean, we could be range bound here to the highs. We could be range bound from the lows to the recent highs or what have you. We could do all sorts of things. But right now, we're not in an uptrend. Mm-hmm. Whether or not, and we're currently in a downtrend within a longer term downtrend, it appears. It feels like the last, so. Could we keep falling? Well, I mean, on the one hand, we're probably due for a bounce,
right?
Just because we're at 7 days. But you could have said that after 5 days, after 6 days, So we could go on a 12-day losing streak. I mean, and 1 day, what would that mean? 2 days. It's going to take, unless we have some face-ripping short covering rally, it's going to take a little while just to get back up to the 50-day line, and then you'd want to get above the 21-day, and then there'd still be the 200-day line to get above. So I think there's just right now there's just a lot of hurdles, and 1 or 2 good days isn't going to solve the problem.
And it seems like a lot of days we're seeing a strong start, or at least an attempt at a strong start that just can't hold it. I mean, even today it was, the pre-market looked a little bit decent, and we had some gains throughout the day. We kept on going back into positive territory, but just couldn't hold it, and just a lot of weak closes lately. Let's go ahead and take a look at the S&P 500. Basically the same story in a lot of ways. We're below those June highs, resistance right there at the 200-day moving average line, and now we're through the 50-day. Anything to add here on the S&P 500?
No, but this one just so clearly shows resistance right at the 200-day line, right at the 50-day line. There's just not any real doubt about it. And this is dangerous. We're going to look at some decent stocks, but you have to watch out for, if the market rallies up to the 50-day line, some of these leading stocks are going to look pretty nice. And then if we hit resistance there at the 50-day line, most stocks are going to follow suit. I mean, yes, there will always be 1 or 2. There's always going to be some that survive, but watch out for that. Until we break above some key resistance levels, I think people should treat any kind of rebounds very, very treacherously.
Yes, and of course we have the Dow Jones Industrial Average. Kind of a similar story there. And then, as I mentioned, the Russell 2000, the small cap index, was down the most, and this was kind of the first one that got above its 50-day moving average line back in July, and did get above its 200-day line, but couldn't hold it, just like the Dow Jones Industrial Average.
Yeah, and it's just nothing is really working right now. It's pretty broad-based, the decline, just as it was a broad-based uptrend for a while there. And now, guess what? It's not just a handful of stocks leading the downside. It's a bunch of them.
Mm-hmm.
It's hard. It's hard with the treasury. The macroeconomic climate is not particularly good. Treasury yields are reflective of that. Uh, it's really hard for the market, especially growth stocks, to rally when you have treasury yields doing this. People discount future growth,
Hmm.
and this has been moving up so sharply. Yeah, it fell a little bit on Friday, but you can see the very relentless increase just from early August, and really close to 11-year highs. So next week's CPI report will be presumably important, but you can see that it's just been a tremendous increase, and that just changes everything. And we resisted it for a while, but once we got above the 50-day line, that really changed things. And yeah, we might be in for a big shift here, for just a change in how things go. And the Fed has, and then next after the CPI, then we've got the Fed meeting.
Right.
It could be a little while before we get a sense of, okay, maybe the worst is over. And that worst is over. The market could be a lot lower by the time we feel the worst is over.
Right. And as you mentioned, I mean, this is having a pretty severe impact on growth stocks. Certainly SMH, the VanEck Semiconductors ETF has shown that weakness. IGB in the software, or if you look at XLK, which is the sector spider ETF related to tech, I mean, they all kind of are telling a similar story.
They do, but of course, we also like on energy. These are all showing real weakness in the chips and the software. There's all sorts of things going weak, but the energy hasn't necessarily been super safe the last couple of weeks. It's like that's showing some weakness. Oil was lagging a little bit. That's coming. So some of these names, some of them are close to buy points. Don't get me wrong, but today UNG, big loser today, and really on news. Like the news happened. Russia's cutting off natural gas. Natural gas falls 7.5%. That's after falling like 5% on Friday,
Right.
when the pipeline didn't come back on. That's that kind of reaction to that kind of news that seemingly is bullish.
Right.
That is not great news. And I'm sort of impressed at how some of these natural gas stocks held up reasonably well, given some of the losses we've seen. But you can't if natural gas continues to slide, you can't sustain that.
Yeah, absolutely. Now, shifting over to a different type of energy, solar energy, let's take a look at Enphase. This has been one of the big winners. I mean, certainly a lot of the solar energy stocks got a big boost after that Inflation Reduction Act. Looked like a bunch of money was going to be pumped into these areas. But Enphase, it's almost like what correction? I mean, this has been holding fairly tight. You take that step back to the weekly chart, and it's really just kind of holding and hasn't even touched its 50-day moving average line yet.
Yeah, I mean, it pulled back. I mean, I would say that if this had been a stock in a handle, the last couple of weeks wouldn't have looked as enticing, but it had such a big run, and then it held on to it. Today, it rebounded above its 21-day line. Certainly at the intradays, you could have drawn a trend line, arguing that it was breaking a trend line, but you just have to watch out. It's like it's a dangerous time for the market. It's like, if the market retreats, how much can this move up? How much can it perform? I mean, look, the RS line is shooting to new highs, and I mean, almost going flat would get the RS line to go high. So you go up 4%, 5%, it's definitely going to rise. So you could do there, but there's just the risk that it comes lower. We definitely saw some stocks on Friday that were looking strong, that have similar looks to this, and then reverse lower because the market did. Could come to the 50-day line. Could also form a base after this week. It's on its track on a weekly chart. It will have a flat base, assuming it can stay within this kind of range. So it's doing really well. Hot sector. I mean, it's number one, and we're going to look at another one, but there's a whole bunch of ones we could look at,
Right.
that are looking pretty strong.
Yeah, and just one thing before we go on this one. I mean, the volume today was pretty impressive. This was the highest volume that we've seen in quite a while. So nice to see that volume happen on a bounce. Although it didn't quite get above that trend line, it certainly got support where you would have wanted to see it at the 21-day line. Now, stock of the day that we had today, Sunrun, from an article that Brian Deegan wrote. What is compare and contrast here? Is Enphase really where you want to be, or are some of these also rans, giving you a chance for something that's maybe not quite as extended, but still has room to run?
I mean, there's always those kind of arguments all sorts of ways, and it's a different field. These are the installers as opposed to, product maker and inverter maker of Enphase. So they're all sort of, they do tend to trend together in one way, but yeah, obviously Enphase has been doing better. This one is consolidating fairly nicely above the 200-day line, got back above the 21-day line. It sort of bounced above its from its 10-week line intraday. So there's some nice action. Maybe this forms a new base. Maybe it breaks its trend line. But yeah, there's a lot of overhead resistance. This is losing money. It's going to continue to lose money for at least the short run, at least supposedly through next year. So, you can make an argument with this. You can make an argument with for Enphase, which does seem like one of the definitely the group leaders. You could go for something like TAN as well, which is the ETF.
And sometimes that helps reduce your volatility to a degree. We were talking about this on one of our recent swing trader scorecards, that you had 11 days between June 2nd and July 26th here, where Enphase was up or down more than 5% from close to close, and TAN, had a lot fewer, half that. So sometimes the ETF can be a little bit less volatile and maybe a little bit easier to hold in that regard. Just to kind of wrap up the clean theme, I guess, let's go ahead and take a look at Waste Connections. This is in the pollution control group, which normally doesn't seem like that exciting a group, but here we are. Pollution control seems like there's more setups happening in this area, and it's the number 16 group out of 197 of our industry groups.
Yeah, and it's definitely been trending up in the last. You can see a lot of these stocks have really made big moves in the past couple of months. Now they've consolidated. This one held support of the 21-day line. As you marked, that's a blue dot. That the RS line is at a new high, while the stock is still in a base, and that's especially bullish when you can see that that's how much it's outperforming. Today you could have it sort of probably broke a trend line in that handle. It did back off, which isn't the best, but then the market wasn't weak. But see some positive blue days. That's 3 straight up days, and above average volume. So there's a lot to like there. Again, but how much do you want to be playing that? I mean, I think you have to be thinking, I could buy these, but this isn't a bull market. This is, at best, a very beleaguered market rally or something that maybe we'll get a bounce. But you have to keep in mind is that, the risks are higher buying a stock in this situation because you're sort of fighting the market tide. It might work, but it's just something that investors have to do. And you might decide, you know what, I'm just going to sit out in a few stocks I'm going to let go by, and then if the market improves, then I'll jump in.
Yeah, certainly. You got to fight that feeling of having to do something at all times, because sometimes it's better to just sit on the sidelines and wait. Well, thanks a lot for the analysis, Ed. As a reminder, we'll be back doing some more analysis at the open on IBD Live, which we do every morning, starting 10 minutes before the open and lasting for a full hour and a half or more. So definitely take a look at that, and you can always reach us at investors.com/IBD Live to try that out or view us. Thanks for joining us today, and we'll be right back here after the close tomorrow on Stock Market Today. Take care.